Bernard, Outreach Specialist for the Center for Financial Security at the University of Wisconsin-Madison. Thank you for joining us for today's webinar on tax code knowledge and behavioral responses among EITC recipients. Our presenters today are Sarah Halpern-Meakin, Assistant Professor in Human Development and Family Studies at UW-Madison. She's also a CFS and Institute for Research on Poverty affiliate. Amy Brown, Program Officer of Financial Assets at the Ford Foundation, and David Marzal, President and CEO of the Center for Economic Progress. Please submit questions by clicking on the Ask a Question icon in the bottom right corner of your screen. And with that, I will turn it over to Sarah.
Thank you, Hallie, and thank you to the Center for Financial Security. I really appreciate the opportunity to talk to you all about my research today. Today I'm going to be talking about a joint project with Laura Tack of Cornell University. This is part of a larger project on the Earned Income Tax Credit and the lives of lower income workers that will be published as a book later this year. The book is entitled, "It's Not Like I'm Poor." Just by way of brief background, the Earned Income Tax Credit is a refundable tax credit for lower income workers. A small sum is available to childless workers, with the largest benefits going to those with dependent children, with increasing benefits up to 3 children. The EITC benefits phase in for those with earnings up to $12,000. Benefits plateau for those earning between around $12,000 and $18,000. And then benefits decline, gradually phasing out once tax filers' earnings exceed around $42,000. These figures vary from year to year based on the EIC schedules and depend on the number of children you have and your marital status. There's been a massive amount of research trying to understand the Earned Income Tax Credit because it's such an important source of support for working families in the United States. I'm going to talk today about how the incentives in the Earned Income Tax Credit may or may not be understood by recipients. So the structure of the Earned Income Tax Credit offers incentives and disincentives around marriage, childbearing, and labor supply. So for example, up to 3 children, having an additional child would get more earned income tax benefits. So that is, the EITC might be seen as incentivizing having an additional child. However, the effects of labor market disincentives are secondary earners, not household heads. But this previous research can't really tell us why it is that low-income parents do or don't respond to the EITC's incentives. And this is the issue we explore in the present study. We use qualitative data to ask 2 questions. What type of incentive structure do EITC recipients actually perceive, and how do these perceptions influence their behavioral responses to the program? The data we use to explore these questions comes from in-depth semi-structured interviews we did with 115 EITC recipient families in the Boston metropolitan area. We recruited these respondents from nonprofit and for-profit tax preparation sites and Head Start centers. We did short surveys with them around tax time, and then we drew a stratified random sample of those we had surveyed to do in-depth qualitative interviews with them. In all, we interviewed 115 families, with these interviews lasting around 2.5 hours on average. And we covered, as you can imagine, in 2.5 hours, a wide range of topics. So we asked structured questions about how people spent their refund. We got a detailed accounting of their monthly budgets, all the expenses they had, all sources of other income they had. And we also asked open-ended questions. For example, how people made decisions around spending their refund, what those decisions meant to them, and what sorts of strategies they used to make ends meet. Today, I'm just focusing on a piece of what we learned in doing this research. So, how did people understand their refund? 90% of people had heard of the Earned Income Tax Credit and knew they had received a large tax refund check because of it. Many people knew that they had received the EITC because they worked or because they had children. When we asked people what they knew about the EITC, we got responses, for example, like this. The only thing I know is that because I'm not paid so well and because I'm a family of 2 with my son, I qualify. In addition, most people knew roughly the total amount of their tax refund check, but few knew the exact amount of the EITC specifically. For example, we asked one woman, how much did you receive from the EITC? And she said, well, I got, I think 5, I don't know, it was 5 something from federal, which is the bigger one, and then it was like 1,000 from state. We asked, do you know if some of that was from the EITC? And she said, yeah, that's what I think, because that's the only way I would get that much money back, because they don't even take that much out of me to get that much back. Or is it called unearned income? I thought it was called unearned income. And the sentiments this woman was expressing were common across recipients. People had some familiarity with the program, but not any sort of deep, intimate knowledge. When the woman consulted her tax returns later in the interview, we saw that the actual amount she had gotten in her federal refund was around $4,000, with approximately $1,400 of that coming from the EITC, and her state refund was about $760. People's experiences of the refund, however, are deeply felt. The lack of visibility of this government assistance program and the association it has in people's minds with children and with work create a real notable lack of stigma associated with benefit receipt here. People don't see this as a government handout in the same way that they might see welfare from TANF, for example, or food stamps. Instead, people described getting the EITC as something like winning the lottery or being better than Christmas. It was a bonus that they got. And there are a number of features that we see contributing to this lack of stigma. First, people know it's for working parents, a category of people who are generally seen as deserving of help. And second, even though the program is means tested, it's delivered through a universal system. So it's not just lower income folks who go file their tax returns and get a tax refund. People up and down the income spectrum do that. And so going to a for-profit tax preparer, getting your taxes filed, and getting that benefit back feels really different to people than does, say, going to the welfare office to file for TANF cash assistance. To see if people understood the incentives that were built into the EITC structure, we asked several questions. We asked people how their refund would change if they made more money, if they got married, or if they got divorced, and if they had another child. And we evaluated their predictions based on their prior year's earned income, whether they were in the phase-in, plateau, or phase-out range of the credit, their marital status, and their number of children. And here's what they said. When we asked people how their refund might change if their earnings increased, we see the green bar indicates for those who are in the phase-in range what their predictions were. People who are in the phase-in range would, in fact, get more back from the EITC if they earned more. And so their predictions were correct if they predicted an increase. Those in the plateau range, represented here by the light brown bar, wouldn't see a change, or they might see a decrease if they earned more. And those in the phase-out range, represented by the dark brown bar here, would see a decrease in their refund if they earned more. There are two main things I want to pull out here. First, a lot of people make incorrect predictions or don't know how an increase in earnings would affect their EITC. Second, those in the phase-in range are most likely to be making a correct prediction here. And we think this can help explain the pattern of responsiveness that we see in terms of labor supply. We see more people moving into the labor force once the EITC was introduced or expanded. But what did people say more generally beyond just making a prediction when we asked them this question? Well, people told us about employment situations in the low-wage labor market that were often precarious or unstable. They found it very difficult to control how much they worked. For example, when we asked one respondent, would working more change your refund, she said, probably if I had more consistent hours. I work for a temp agency, so the stability's not there. I could work for 6 months, then be off for 4 because there's no work. So the idea of her being able to respond to the incentives present in the EITC is just off base. She doesn't actually control her labor supply in that sense. But people did alter their behavior in other ways to try to maximize their refund. For example, people would claim zero, that is, claim zero dependents or exemptions so that the more money was withheld from their paychecks and returned to them at tax time in their refund check. We didn't ask respondents about this systematically, but over a quarter volunteered that they did this. And we assume that this is actually a low estimate because other people might have been doing this, but since we didn't ask, they didn't tell us. So why do respondents do this? Well, one reason was that people liked this as a precautionary savings mechanism. One person said, will the refund be less or more? I don't know. I already pay so much out of my paycheck for taxes. I don't want to pay more money at tax time. So that's why I claim zero. I know that extra money will come back to me. People saw it as a way of savings. In addition, people saw it as a forced savings mechanism. If one woman said, if I put 3 kids down as her exemptions, I get my extra $100 in my paycheck. I won't save that. File with zero, that's your money. I know at tax time I will have that big $5,000 and I will need it for something. When we asked respondents how their refund would change if they got married, if they were single, or if they got divorced, if they were currently married, here's what they said. Most people reported they didn't know how their refund would change. Now, we can't assess the accuracy of people's other responses, whether they would get an increase or a decrease, because that would depend on the financial situation of their hypothetical spouse, how many children people had, etc. But in any event, the modal response was that people simply didn't know. But beyond offering this shrug of the shoulders, people's response generally was more that they would laugh off the question. The idea of marriage was so much of a distant thought for so many people, and the availability of suitable partners was often lacking, that people didn't even consider marriage as part of their way of thinking about how much they would get from their refund check come tax time. Furthermore, even among these single parents, there was really little desire to commingle finances, even if they did get married. People would often use the phrase, well, I'd continue I'd file separately. Married respondents also rejected this question because they thought it was immoral to contemplate divorcing for financial gain. But people did alter their behavior in other ways beyond marrying or divorcing. People would talk about, as I mentioned, filing separately. At least a quarter of people believed they could continue to file as head of household even if they were married. Again, we didn't ask about this systematically. This was something that emerged in interviews that people would volunteer. So, for example, one respondent told us, as you'll see at the bottom, I could still be his wife, but we'd file separate. I mean, I need that refund money regardless. If it wasn't beneficial for me, I'd file my own taxes. And what she means here is not that she'd file her taxes herself, but rather she'd continue filing as head of household, whether or not she got married. Finally, we asked respondents how their refund might change if they had more children. And most everyone predicted an increase. At the time of our interviews in 2007, the ARRA, which created a temporary bump for people who had a third child, did not yet exist. Therefore, you could only get higher EITC benefits for up to 2 children. This means the only group that we see here that's actually making an accurate prediction that they would get a higher EITC refund were they to have more children is those with only 1 child currently. But what did their answers to this question reveal? Well, people had a clear perception of the incentives for their tax refund in general. This is due in part, we believe, to the simplicity of the child tax credit. People had this idea in their heads that you got $1,000 per child, and that was clear and straightforward to them. And people don't think about these various refundable tax credits separately. They just think about their refund together as a whole. People also had a clear understanding that it costs a whole lot more to raise a child than your tax credit could ever pay you. So people saw the incentive present in the program as a weak one. But people did alter their behavior in other ways. For example, by deciding who would claim the kids on their tax refund. People would divide up who would claim the kids among various family members in order to maximize their refunds. And these might be non-resident biological fathers who were paying child support, whether formally or informally, residential boyfriends, grandparents, etc. And the relationship age and residency requirements of the EITC rules often didn't correspond to the ways that family members provided support for children across households or over the course of the year. So when people were allowing somebody else to claim kids, it was often a reflection of the way they saw the people in their lives supporting their children during the year. Again, the 29% of people who reported dividing up who claims the children is likely a lower bounds because this wasn't something we asked about systematically, but rather something that emerged in our interviews. So what can we take away from all of this? First, it's important to understand that EITC filers perceive their refund as a whole. Their perceptions of incentives or disincentives around the EITC are not specific to the EITC, but rather to the amount they see coming from their refund check as a whole. However, the behavioral responses to the EITC and their refund check are not necessarily weak. Rather, people respond in ways other than altering their work hours or their family structure. So people's perceptions of the incentive structure are weak around their labor supply or marriage, but people clearly perceive the incentives to have more children. The structural barriers in the low-wage labor market and in the marriage market prevent people from altering their actual behavior. So even if somebody did accurately perceive the incentives to work more or to get married, people don't see changing their work hours if they're working temporary or unstable jobs or hourly jobs as being possible. And people also don't see it as possible to just go get married. Instead, what people do is they alter their tax filing behavior. It's a lot easier to tick a different box on a form than it is to change your actual work hours, for example. So people would change their filing behavior as a way of maximizing their refund. People would claim zero, they would file separately, and they would divide up who was claiming the children. In our estimation, most of the non-compliance we were seeing were not actual attempts at fraud, but rather people filing taxes in ways that were consistent with how they saw their world. So one takeaway for us is that the tax code, as it relates to marriage and children, doesn't accurately reflect how resources are allocated among low-income households. And EITC beneficiaries, therefore, adjust their behavior accordingly. I'm going to stop there. I know we're running a little late on time, and I want to leave some time for our other panelists to ask some questions.
Welcome to the conference center. Please enter your passcode, followed by the pound sign or hash key.
And if everyone can just pause while we take a second to connect Amy.
Your call has
Thank
been
you.
placed in conference. Welcome to the conference center. Please enter your passcode, followed by the pound sign or hash key.
Hello, can you hear me?
Amy, can you hear us?
Yes, I can. Can you hear me?
Yes, and now it is your turn. So if you're ready to begin, great. Thank you.
I am. Thank you so much. And thank you, Sarah. I found this research really interesting. I think that the things that you found are in some ways not at all surprising, but also really help us advance the conversation about how to support low-income working families. So given that we're short on time, I think I'll move fairly quickly. I'm going to throw out a lot of questions. I don't necessarily have as many answers, but I think maybe some sort of directional cues that come out of the research for me. So just some quick takeaways. This is going to focus in on some of the things Sarah talked about. First of all, clearly no one understands how taxes work or can predict how changes would affect their refund. And I think that this and many other findings are true, not just for low-income folks, but for anyone. It's not clear that the EITC works at all as an incentive, and if so, in what direction? Households have very little control over employment or earnings. I think that it's important to think about the economic context in which policies take place, and this is an important reminder that the EITC does not work the same in all contexts. The reality of families doesn't match the official tax statuses and dependency rules in the IRS. I think that's something that's very relevant to low-income families, and as family structure in the United States is more complicated than the IRS structures. People see taxes as something you maximize, not as a single answer. I think this is sort of a controversial point. There are many things in the tax code that have one answer, but there are other things where you have choices as to how you claim certain things, how you declare certain income. And I think, again, people at all levels of the income, use taxes, see taxes in this way as I need to maximize my refund. Some systems that people use to do this are perfectly legal and others are not. And I think one of the things that Sarah highlighted is that people don't really know the difference. It's not like sometimes they're making choices and sometimes they're purposely committing fraud. I think people are just confused and sort of think of taxes as something that you make fit so that it works best for you. And then finally, just an interesting point and something that we've worked on at the Ford Foundation and other work that we've supported is the idea that people are very eager to save and they don't have very many opportunities to save. It's really hard to save. And so they're jerry-rigging the tax process as a savings mechanism. I think all these come out of the research, and they're all really important findings. So if you flip to the next slide, I'm going to throw out a whole bunch of policy-relevant questions that I think the research raises. And again, more questions than answers, but these will sort of hopefully continue a conversation. So can we switch the slide? Maybe, maybe not, but I'll keep talking. So the first set of questions is really about the purpose of the EITC. And the question is the goal to be encouraging work or rewarding work, or both? And, what's the difference here? And it seems like a lot of the problems that Sarah uncovered are around the EITC not working well as an incentive. But I guess I would argue that I think the EITC does work well as a work support. And so if it's adding to household income for folks who are working in low-wage jobs, and then that's a good thing. And I think that by supporting work, the EITC is probably actually making work more possible because people are able to survive on at those jobs, and so they're able to continue in those jobs. And so I guess my point is that you might not need to know how the EITC works in order for it to function as an incentive. Simply by making work possible, it might incentivize work. And that wouldn't come out in this kind of research. In terms of understanding it, I also want to raise sort of something that David's going to raise a little later as well, which is, from my perspective, I tend to think knowledge is overrated. So the tax code is incredibly complicated. Do we really expect low-income tax filers or any tax filers to understand it? is it enough to make it work for people and to use it as a tool to help achieve policy goals like making work pay? Do we really need people to understand it, or is that just, asking too much? And then the final point I want to make about on this slide is thinking about the economic context. If we're in a situation where there's high unemployment and folks can't really control their work efforts, then what other kinds of policies should we be thinking about if we want to incentivize and reward work? So whether those are job creation kind of policies, minimum wage policies, I think that context matters. And in a different economic environment, my guess is that the EITC would function more as an incentive than in the current context. All right, so I'm going to move on to another set of questions on the next slide around this issue of tax status and definitions of dependency, and the fact that Sarah raised that the definitions in the IRS don't really match how families see themselves or how families actually work. And so the question is, can we change that? Could we restructure how we define family in the tax code? What qualifies as head of household? What qualifies as couples filing together? What qualifies as families if we have multi-generational families, if we have non-related people who are living together and sharing support? Can we think differently about how we define family, essentially, in a way that will better match how families actually work? And I think related to that gets back to this question about the goals of the EITC. If the goal is to support families, then maybe it's okay to open up the definition. Maybe being very narrow about who can be a head of household and who can claim a child, maybe that's not only doesn't it match how families work, but maybe it's not the best approach given that families are complicated. And should we open up to include non-custodial fathers, to include relatives who are supporting kids? Should we make it more open? And will that end up providing more support for these families that don't necessarily look like what the IRS defines as a family? On the next slide, I'm going to keep moving here. Some policy questions around the difference between options and fraud. I sort of mentioned this earlier, so I won't spend much time on it. But do we want a tax system that has one answer, or do we want a tax system where you have choices? One is simpler than the other, right? One is more flexible than the other. And I think we can debate this point. But right now, it's a mix of both. And people at all income levels have some choices and some things that are fixed, and it's not always clear which is which, and I think that makes for confusion, and that makes for a lot of activity that is technically fraud, but that tax filers don't necessarily see as fraud. So I'm moving on to the next slide, a set of policy questions around sort of this idea of incentives and behavioral economics. So I have certainly seen that folks who are filing taxes feel very differently about it than other benefits. I think that's a really important finding from the research. And how do we take advantage of that? How do we think about using the tax system to support families in this way that people feel empowered as opposed to stigmatized? I'm just going to throw out a couple of other questions, putting on sort of a behavioral economics hat. Given that there are, positive incentives, but also negative incentives, and given what we know about the people's response to opportunity versus loss and how loss-averse people are there different ways of framing the EITC and framing it within the tax code that would really emphasize the potential loss of refund from working less or from just different types of things that people can control? Are there ways to harness that, I guess, is my question, in order to incentivize better if our goal is to incentivize? And then I was trying to think about whether there were other behavioral insights that could be relevant. David, I don't know if he's going to talk about it, is doing a very interesting pilot around the timing of payments. And a question maybe for that research is whether the timing of incentives makes a difference in influencing behavior. And then on my final slide, I'm just going to close with some questions about this savings point. So we are supporting a project called Refund to Savings that is being done by Washington University. And it's a project that is being done jointly with Intuit, the makers of TurboTax. And everybody who uses Free File on Intuit, which is close to 1 million people, is a part of this research project. And the goal is to look at ways to promote savings of a tax refund. And they're using a lot of different things from priming and motivational prompts, anchor amounts. But they're really finding the same thing that Sarah found, which is that people really want to save, and they're using the tax refund moment to save, and that it's very powerful. And beyond savings, they're using it to pay down debt. An extraordinary amount of debt payment happens at that tax moment from that big refund. And so, there are questions about whether we can find other ways to help people save. I don't know if tax time is the best time or not, but it's one of the few times that people have in practicality to save, and foregoing some of your paycheck in order to get a bigger tax refund is an actual powerful tool that people have at their disposal that makes savings easier and more possible. And so one of the things that the refund to savings research is trying to look at is, can we leverage the tax process even more in new ways to help people achieve what they have basically put out there as a goal of increasing their savings and using this moment to increase their savings. So that's a lot of questions, and hopefully it's been intelligible, and I hope that we can continue this conversation and try to come up with some answers together. Thank you.
Thank you, Amy. And now, David.
Thank you, Hallie, and thank you, Amy, as well. Very pleased to be with everyone. Hope that everyone's surviving through these technical glitches. I did want to really focus first on the remarks that I share a lot of Amy's kind of initial takeaways. Center for Economic Progress, the organization I lead, has served about 350,000 taxpayers, brought back $500 million in refunds in 16 years of preparing tax returns. And our experience organizationally is that the tax code is incredibly complicated, and that it is very hard for the average taxpayer to pull apart in any way, understand their refund and what they're eligible for or what they could be denied. The Earned Income Tax Credit, as I think I agree with Amy, is a valuable income supplement, and certainly based on the study that Sarah shared, is perceived overwhelmingly positively by recipients, and has, I think, in political circles, in practical circles, has probably one of the highest positive perceptions of an anti-poverty program. So there's a rare alignment going on between, I think, the experience of recipients and of policymakers, which is something very positive. Since 2007, though, since this study really focused on work done about 6-7 years ago, the tax code actually has become more complex. We have an expanded Earned Income Tax Credit, an expanded Child Tax Credit, the new Refundable American Opportunity Tax Credit, and then there was the one-time American Recovery Tax Credit. The reality is that the behind-the-scenes machinations of policymakers are so technical in nature that filers are just not going to get it and ever, I think, really truly ever understand fully where their refund is coming from. And I think one of the most interesting things we have experienced is that people actually over-withhold in addition to being eligible for credits. And so withholding, and I think this aligns with what Amy said, has become a proxy for forced savings, which could be a positive or could be a negative if you look at the liquidity of the low-income taxpayers we're talking about. If you could turn the slide. From a practical considerations perspective, a few quick comments. We cannot really underestimate the importance of the IRS role in adequately informing taxpayers about how their tax refund or tax liability is determined. And I would say by all measures, while we work closely with the IRS gets a failing grade with respect to how it informs and educates taxpayers. Of course, the real blame lies with Congress because they have created such a incredibly complex tax code that the IRS is often trying to play catch-up with respect to any informational materials, adapting tax forms, and otherwise doing outreach to educate taxpayers. Tax preparers, and the study points this out, and I think it's very interesting in our experience as well, tax preparers provide a critical interface for taxpayers, but the private sector tax preparers often have misaligned incentives to truly inform and educate taxpayers. And what I mean by that very simply is that it's a fee-based model, and it's not necessarily in their self-interest to spend a lot of time explaining the tax code or underscoring why someone got a bigger EITC one year versus another, when at the end of the day they're about maximizing revenue as a tax preparer. And speaking of tax preparers, one of the huge problems we face is if they are going to be the intermediaries with respect to preparing tax returns, the fact that there are currently no licensing or certification requirements for commercial preparers means that there just is no way to determine consistency in how they're working with or talking to taxpayers. Amy touched on this concept of forced savings, and I think the study really highlighted this as well. I think that could be a positive or it could be a negative. And a few things that I wanted to point out from a negative perspective is that larger refunds actually feed into a rush to get returns prepared in January, and I think add to the very high cost of tax preparation and the high use of what would be high cost or predatory refund settlement products. Even with refund anticipation loans being gone, there are a lot of other ways for people to expedite their refunds because they're so desperate for the cash to pay bills that they're going to settle for paying a lot more than they necessarily need to. And I think the flip side of this forced savings behavior is that people, given the challenges in the economy, given their the tough workforce environment, they're falling behind in paying bills, and very often, in our experience, are incurring significant penalties and fees because of paying their bills late, and they may actually be reducing their credit scores through this kind of behavior. So if you could turn the page, policy considerations. I'd like to throw a few out. I think what is enormously interesting here is that the EITC does have such positive attributes in its positivity by recipients. There is no stigma with the EITC, and I think that is something that we could build on. However, I think we need to ask ourselves, is really the tax code the best means to deliver income supports? The high rate of error in the EITC is, I think, really driven by the complexity of the tax code and having taxpayers not have consistent sources of information. As I think the study points out, word of mouth is not necessarily the best way to get advice, which could ultimately have legal ramifications. And I really like Amy's idea of broadening the family definition under the Earned Income Tax Credit. I think the tax code is woefully behind in really dealing with issues of family complexity, and I think a lot of error and fraud in the tax code is driven by families that are constantly morphing and adapting given family structures and the tough economy. And I think one thing really to highlight from my end is that the lack of understanding how the tax code actually operates does really play into negative perceptions of government and I think ultimately undermines civic engagement and budget deliberations. How can anyone who's a taxpayer in this country, and there are 130 million taxpayers, have any kind of real sense of what they want tax policy to look like and the budget to look like if they can't even figure out when they do their own return where their refund is coming from, and whether it's through withholding or whether it's because there are credits and other tax benefits out there. So I think there's a strong space here to simplify the tax code, or a strong argument. So a few final comments here. In the interest of time, I'll keep this very short. I have put forward the idea here today of thinking about having the IRS consider a tax disclosure statement. It could be based somewhat on the disclosures now required for credit cards, and I've included this in the last card of the deck, which you'll see. I think this could serve an educational purpose, and it could really help to explain to taxpayers why they're getting a refund versus if they owe taxes, explain the source of their refund based on the credit or withholding, explain the connection of a child or dependent to the tax credit, and last but not least, from an educational perspective, help them to adjust things if they need to with respect to their withholding by reviewing their W-4 form. again, consistent with this study, I think virtually almost no taxpayers have a sense of how they fill out their W-4. Their withholding form connects ultimately to when they file their return and whether or not they get a refund. So I want to leave you with a new twist. I represent the Center for Economic Progress. We happen to be in the city of Chicago. We have a strong relationship with Mayor Rahm Emanuel, who's been a long-time proponent of the EITC. And we are exploring a very interesting project, or actually have launched a project, that looks at the current structure of the tax code and specifically the forced savings mentality and flipping it around and allowing taxpayers to claim a portion of EITC as advance payments with the intent to determine whether this improves their liquidity and might reduce their reliance on predatory products. We have a pilot that has launched. We're recruiting 500 participants. Each of them will be able to claim a maximum of $2,000 paid out quarterly in payments of no more than $500 over the course of this year. They will still, in most cases, get a refund, and likely a large refund, so they can still save. But again, this is exploring a different payout mechanism if indeed the EITC is an income support versus a tax benefit. And at the back end of this process, we have a rigorous evaluation being conducted by Ruby Mendenhall at the University of Illinois to track behavior and attitudes among participants and to assess the rollout and the practicalities of this pilot. We expect to report in spring of 2015, and would be glad to share that with you at that time. And again, thank you very much for having a chance to participate today.
Thanks so much, David. That was very interesting. And we have just a few minutes, and I have gotten quite a few very interesting questions from the audience. I think maybe we have time for one or two, so I'm going to go with a theme that I've seen throughout. I think I'll pose this to David first, just because you had just spoken about this pilot program, and this might kind of tie into that. So the presenter, or the presenters, because Amy spoke about this as well, says that people are eager to save. So what would the value be in possibly like automatically placing a portion of the EITC payment in a tax-deferred plan, such as an IRA?
Well, I think creating alignment between savings behavior and retirement, I think, would be very positive. So the idea of leveraging that tax refund and giving people a chance to specifically earmark a portion of their refund for retirement makes a lot of sense. That's one of the reasons why I believe Fidelity or Vanguard, some of the companies that are really in the business of promoting retirement savings in this country, have created a very easy opportunity for tax filers to earmark a portion of their refund towards an IRA. So I think this is consistent with the desire for people to want to save all or a portion of their refund. Again, from my remarks, what I want to point out is that automatically saying people could save all of their refund is highly unlikely. But again, given the retirement savings crisis in this country, making it possible to link a tax refund to an IRA deposit makes a lot of sense.
So this is Amy, if I could chime in on that as well. The R2S research explored these questions, and people, as I said before, people were really eager to be able to leverage their tax refund in different ways. And folks wanted all kinds of options. They wanted the retirement savings option, but I think mostly people were focused on shorter term. They wanted the opportunity to save. They wanted different ways to save. They wanted to be able to open a savings account directly on the tax form. They wanted to be able to get multiple prepaid cards. They wanted to be able to pay down debt directly from their tax refund, again, to type in your credit card number and send a part of the refund directly to them. They wanted to open 529 accounts to do college savings from their kids. They wanted to put money into retirement. I think the new federal MyRA that Treasury is experimenting with, there are opportunities to try to help people directly fund those on the tax form. So this is definitely something that people are interested in. I think it's complicated. I think David is exactly right that it's not so easy as being able to save all of your refund, but people do want to use their refunds in these ways, and I think that we should try to support that and give them different options in order to help make that happen.
Thank you both for your answers. I really appreciate that. And just because we are about 1 minute shy of 1 o'clock Central Time, I'm going to go ahead and close there, but I would like to invite our audience members to go ahead and submit questions to me via my email that actually is connected to your registration, and I can forward those questions along to our panel today. I'd like to thank everybody for taking part today. I apologize for the technical difficulties once again, and I really would like to thank Sarah Halpern-Meakin, Amy Brown, David Marzal for their excellent presentations and insights on the topic today. And thanks to everyone who tuned in. Next month, we do have a webinar on youth financial literacy programs, so that will be on April 23rd, actually. And this webinar will be archived on our website, cfs.wisc.edu. Thank you again for joining us, and have a nice day.